morning and welcome to the Macro Show for Wednesday, September 18th. I'm Emma Vlasic and I'm joined in the studio today by Hedgeye CEO and Head of Macro, Keith McCullough. Keith, I will hand it right over to you.
Thank you. Emma is looking very business person today because she's doing client meetings, right?
Yeah.
Yep. So we can't wear, I can't wear this. I can't wear this.
It's a good shirt, though.
You like that? Yeah. That's just, if we're meeting with accounts in Boston, I'm definitely not wearing that one. But good morning, or in Princeton for that matter. Good morning. Top three things this morning. Number one is going to be interest rates. Number two is going to be oil. And number three is going to be the volatility of it all. So first we got the Fed, all right? So we got the Fed and interest rates, et cetera, et cetera. So this is the day where the market's going to decide, maybe abruptly, as to whether or not Powell is going to bend a knee to Wall Street and give in to 50 or 75 basis points of rate cuts. And that's not just Wall Street, that's an entire political party that asked for the 75 basis points. Or he actually has some integrity left and actually stays with probably not what he should be cutting by, 25 basis points, but what he thought he'd be cutting by at this time last week. Don't forget that the Fed Fund futures had like a 13 or 15 or 16% probability of 50 basis points last week. Then it went to like almost 2/3 of a chance. So I still think there's a coin toss on what Powell does. I have no idea what the guy's going to do. But what I do know is this, and this is critical, is that I know what I'm going to do after the decision. So again, the entirety of the process is built to, as my dad taught me, as I wrote in this early look note this morning, and thanks, Dad, it's to read and react. He was, of course, teaching me how to play hockey, but there's no difference in hockey. Read and react to the game that you're in. Don't play a game that you'd like to have, okay? A lot of people do that. They'd like there to be no insider trading, no leaks, or me talking about it. They'd like to have no impact from the machine or the daily flows of 0 days to expiration options, but that's the game we're in. So again, we'll play the game that we're in within the risk range. The 2-year yield, 351 to 380. So again, I think if he cuts by 50, you get a new low in the 2-year. If he doesn't, that thing could go pretty quickly towards 380. And again, the most recent local low, which I circled there, write it down if you didn't, is 3.56 on the 2-year. For the 10-year, the equivalent of that is 3.62. So can you get lower than low? We've done, have you ever played, limbo?
Yeah.
Yeah?
Where you have to go under the...
Can you get low?
I think squatting and doing all that for hockey in the past definitely helps.
I can get incredibly low. Like, I can do the splits.
Okay, that's pretty good.
So
yeah.
I what I'm saying is that as a matter of life experience and as a practitioner of the limbo, I could tell you that chart just did the limbo at the lowest level. Mm-hmm. So if it could get below that, then it's even better. At some point, you got to get below the concrete, which is impossible. Now, some people want to redefine where the concrete or where the floor is on interest rates, but I digress. Secondly, we sent out a sell signal yesterday. Again, they're coaching notes. It's not a portfolio in real-time alerts that said I would sell oil here, I'd sell XOP here, and I'd sell these two stocks here. So again, it doesn't have to be 4 different real-time alerts. Again, I've evolved that process so that I can show you the in-game decision making. And of course, we hit on both BP and PR, which is Permian, 2 of the many shorts that Fernando Valle has absolutely nailed. So again, we get a pullback in oil here, not surprisingly, from the top end of the range. No, I wasn't shorting energy stocks until we saw that. Yes, I have a lot of shorts on the board that haven't worked yet. That's not atypical, by the way. This is the 3rd time this has happened to me since Quad 4 started in July. What you tend to get is all my haters appear like yesterday saying, oh, he's getting killed. And then the stocks will get killed and we'll never hear from them again, or until the next time. That's the core, right? If you're going to hate somebody, you got to find them in their worst moment and tell everyone that that's their every moment, right? That's how I love them. And I love playing against them. And I love waiting for energy, because 2 of the 14 sell signals are 2 energy stocks, which I waited until yesterday. Now, God forbid, 3 days ago, I started putting out some of these shorts that have worked fantastically for us during Quad 4. But again, I put some of the positions that I put on Friday, so those are wrong like 3 days later. Whatever. That's not how you do short selling. Short selling is incremental, okay? So be an incrementalist. I put it on if it's wrong on one timestamp, then keep adding 25 basis points, 50 basis points a day, because you got to get towards that 2% max short position at the single stock level if you do it the way that I do it. So again, that's an opportunity as opposed to a trolling activity that is of any relevance other than being a pretty good contra stream for me, by the way. So we got that. And then finally, the VIX. I mean, this is not a good setup because you have NVIDIA and Apple have broken trend, okay? That's a big problem. Now, Amazon has gone back to bullish trend as an offset to that, but these are new, and we've walked through these names multiple times in the last couple weeks, just saying, pay attention. You know, again, Apple 122 was the trend level, and it went there, and it failed. So these are big issues, and it came on fundamentals. Felix wrote a negative note on Apple and iPhone demand, for example, earlier this week to institutional clients. But what you also have is still a bullish VIX setup, and you'll also have options expiration on Friday, like the biggest ever. You know, quarterly options expiration or close to it. $3 trillion in notional when S&P and S&P index and SPY is notional is going to have to expire or roll over. So we got a lot going on in here. And it's not atypical, right? So if you look at the short-term vol curve, I said this thing would go into the mid-20s. I said it every day because I have a crystal ball, and there it is. You know, God put me on this earth to have the crystal ball. No, it's just proactively predictable behavior, right? Wall Street's no longer allowed to hedge out past their nose. They have to hedge the day before. And then they feel, it's a feeling, I'm hedged for this event. If Powell only cuts by 25 basis points, I'm hedged. Okay. But you're not hedged like next week or next month or 3 months, imagine, into and out of the election. So we've seen this movie many times before, and we'll see how this movie plays out from here. But again, the behavior and the predictability of how the machine and short-term options are flowing is becoming more predictable. You see how that works? Because they're fractal patterns. You have self-similar sets. You know how that works? Keeps happening and happens and happens and keeps happening. Those are your top 3 things. All right? I had somebody tell me the other day that he mocks fractal math, old wall guy. He mocks fractal math because he doesn't understand it.
Easy to do if you don't understand it.
Mandelbrot wasn't at Yale when you went there, was he? He was dead.
No, I don't.
Or he was on. When we started the firm, he was really in his later years.
Okay, yeah.
If you went and he'd sit, in the dining hall, like he'd sit by himself and just talk to himself.
Really?
And if you're like, okay, this guy's going to change the world from a market and risk management perspective in my mind. If you went with what he looked like and all that, you would have never done it.
Yeah.
But if you just read his book and you didn't pay attention to what was going on there, then you would have. Right? Don't judge a book by its cover. Measure What Matters. This is a great book. John Doerr, who helped the Google team when they were younger, understand that it's really anybody can come up with an idea, is what John Doerr says. But it's really the execution that matters. It's the execution of your business model. It's the execution of your family life. It's the execution of your parenting. It's the execution of your portfolio construction. Everything is about execution. Now, shortcuts, a lot of people like to think they're theme-based investors, narrative-based investors, blah, 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 blah. That's easier, right? What's hard is to execute every day. Do hard things, all right? I highlight that again this morning in today's early look with my man, Muhammad Ali. What keeps me going is goals. Our goal has always been to be the transparent and accountable leader on Wall Street. We're going to continue to be that change that Wall Street needs to see in this world, at least. S&P 500 risk range. Just to get into it, we're at 5391. This number is uncomfortably low if you're sitting there after 7 straight up days for SPY Monkey, hoping for another one. I don't hope. Again, I short into these, and I will continue to short into these, provided that they're at the top end of the range. And no, these things are not the S&P 500 because it remains bullish trend. So again, top end of the range is actually really green right now. So this would be the alternative scenario to Powell. Like, what if Powell cuts by 75 basis points? Will he scare the living daylights out of people who know what that means? Or 50 basis points? If you give Wall Street what they want, that would be a new all-time closing high. So that's the first time we've had the top end of the range is an all-time closing high. As I've said multiple times, as you phase transition from quad 4 to quad 3, quad 3, by the way, has been very bullish for the S&P 500 many times over because there are a lot of things that go up that are huge components of the S&P 500. If it backs off there and it looks like oil, then it doesn't. If it looks like bond yields, then it doesn't. So again, those look like quad 4, continue to look like quad 4, whereas you got this thing, which is new, so we're going to highlight it for what it is. It's all about the newness. Like when something, it's, as Mandelbrot taught me, it's the particular thing. It's a particular thing that happens in particular points in cycle time, or in shorter term windows of trading, clock time, as Gatherall would have called it in his book, The Volatility Service. So again, you got to read all that stuff. Now Gatherall, if you went up to him, he would be like, wow, that's a cool cat. I'm going to believe him. But all their work goes together. All the work of humanity goes together. It's amazing. I'm talking to a Yale grad. All right, what else we got here this morning? Let's see here. We have the volume. Was nowhere to be found yesterday. Again, this is an ongoing issue. The good news is that there wasn't insider trading in any major stock like Intel like the day before, but you still had plenty of activity in options space. What happened in ODTE space was they actually tried to, there's the Intel volume, look at that, almost 200 million shares. Like Intel is as old as this book itself, okay? When you go back to where did John Doerr really learn these things to teach Google, there's this guy named Andy Grove, you know who he is, from Intel, who taught him that, right? We all learn from everyone else. We stand on the shoulders of giants if you understand who they are, or you can stand on lily pads that are about to drown you. So again, this is an incredible amount of volume after people traded on inside information. Incredible times we live in. So again, I'm not getting mad about it. Somebody said, well, he's only highlighting that because he's probably short Intel. Bullshit. That's your answer. That's what you need it to be. Who you want me to be and need me to be for 16 years, it just hasn't panned out there, troll boy. How do you think about that? How about a kiss? There you go. All right, what else we got going on for you this morning? We got sectors. 6 out of 11 were down, so you're seeing some deterioration. Only 54% of stocks were up on the 7th up day in a row for the S&P 500. So again, pressure continues to mount. Now, what is the fundamental going to be? Again, if you give me 50 basis points, that means that the retail sales number is what I thought it was, which is not how Wall Street articulated it. They called it better than expected. We showed it to you yesterday. It was another rate of change slowdown, i.e. quad 4. So the consumer slowed pretty materially here since March. We showed this yesterday. Retail sales have gone from 3.7, 3.6% growth towards 2. And they have tougher comps pending. So it's going to get slower. The bond market gets that. Oil gets that. Demand slowing, et cetera, et cetera. So keep those quad 4 positions on. And the best positions to keep on are the ones that will work, obviously, in quad 3 as well. I was buying some consumer staples yesterday. Healthcare, I was not. Now, healthcare isn't as good as utilities in quad 3. So healthcare, as you can see, was down a full percent yesterday. It's still up 7% versus tech down 3%. On the bongo board there for quad 4 in Q3 to date. So I'd say that, and Tom's gone back and forth with me on this, I'd say healthcare is well, first of all, it's the least strong of signal strength equity longs. So I'll keep that at my minimum. Again, if it's building signal strength, we build the positions up. I double dipped in utilities. When I have two things that are the same thing, like gold and physical gold, or XLU and FUTY, which is the other utility position that I have in the asset allocation model, that means it's building signal strength. So healthcare, as of yesterday, it's only a day, but every day matters. It's the particular thing that happens. You can't tell the market what to do. It just told you what it did. Okay, so we got that healthcare moderately less bullish relative to other things. It's still, of course, bullish trend on your pin sheet in pink terms, PINK. I'm also long XLV in the asset allocation model, so we'll see how that goes from here. What else we got going on? Knocking down the pins on Tier 1 Alpha data. We already gave you the first one. 25 is your super short dated call setup on the chart of the day actually. The flip line's very near at 56.12. So this is not a setup for old wall men. If you don't know everything that I've said so far this morning, then you're old wall, right? You don't get it. You don't have the time for that. You can't incorporate that. It's easier to just tell people to buy stocks and pay you a fee on it. So this is where we're at. It is day 3 where 1 month is below 3 month. But as you've seen in that chart in the past, and in fact, we actually pulled 1 month versus 3 month back further than that chart goes. There are plenty of times where you get this like 3-day, 4-day, 5-day breakdown and then resurgence back above. So we'll see, because again, the top end of my risk range in the VIX is up at 23, which is much higher than where it's currently trading. So something to think about in addition to everything else. On the impact table, I went through it this morning with Emily, fundamentally bearish on Lilly and Novo and the whole weight loss drug thing. That's a bubble. I mean, many people own that and are bag holding that. I mean, it was a terrible day yesterday for Lilly, as you can see there. And Novo broke trend as well. We talked about that on the call this morning. Microsoft back to bullish trend and then follow through. See how that signal works? Signal change, thing goes up, other things go down. Apple went down, Nvidia went down, Microsoft went up. Well, why? It's math. It's the crazy guys eating by himself in the dining hall at Yale. Yeah, it's just math, right? So that's what happened. Microsoft obviously back to bullish trade and bullish trend. And Felix likes Microsoft, so I got no problem buying the damn dips in Microsoft. Why not? Because it used to be a bearish trend? Oh, absolutely not. I'm not that smart. I'm smart enough to continue to execute on the process, however, which makes you street smart. What else we got in Asia last night? Japan finally stopped going down for a day. Same thing with China. No change. Both are still bearish trend. India stopped going up for a day. So it's been the opposite. We're set up, obviously opposite of all those moves, thankfully, because those have been great moves. India just made an all-time high the day before that, so things do correct from there. I did find it interesting to see the Indonesian rate cut. I mean, this is partly what happens when the U.S. All the intelligentsia, the elites, the establishment econs are begging. Even Ed Hyman came out yesterday. He's like, that's kind of like a contraindicator. But he comes out, yeah, I go 50 basis points. They all want it. So what the Indonesians get was a 7% rip in the rupee, and they're like, shit, we don't want that. Let's cut rates. So there's a currency war. These countries aren't as dumb as America would hope they are. I mean, I'd say that our policies devaluing the dollar in the face of rising inflation in the quarter after the one we're ending, because we have disinflation there, sucks them in, gives them, the last thing you want is an economist, an establishment economist or a Fed economist feel comfortable with where inflation is. Or call it transitory. I mean, these are not good things. But again, the currency war, we're playing it, of course, for long pounds, which are up again this morning. BOE decision tomorrow, we had that as a catalyst. That was pretty easy to be long of that. What else we got going on for you this morning? Malaysia was down a little bit, but it went vertical the day before. I was just trolling people out there on Twitter yesterday. I'm like, is anybody long Malaysia? You're not long Malaysia. They're on like Huntington Beach with Drawdown Josh Brown getting free food. We're along Malaysia. We'll never get along with those people, right? So again, we don't need to. Why would we? We don't want them to be messing with our Malaysia. Malaysia's going to be for sale today. Maybe we get to buy some back because we sold some on strength. I'm short in Europe. I'm short the Dutch. There's a good example of another way to express. We're short semiconductors via SMH. We're short tech via XLK, and we're short tech, semis, et cetera, AI exposure via EWN. We used to be long all three of those things. So again, don't call me, you can call me whatever you want, but I do go both ways and I like it. And that's a good example of that, very good example of that. We held that one for a while. It has nothing to do with the Dutch people. Dutch people, great people. EZA down a little bit this morning, South Africa, a 0.5%. Maybe we get to buy some more back there. That's been another outstanding long. Again, it was overbought yesterday. We get a lot of overbought signals here. FKU, which is the UK long, that signaled the medium-term trade overbought yesterday as well. So you see me taking down basically most of my positions to their minimum. Okay, I had them grossed up. Took down my equity positions, took down my fixed income positions, so that I can just sit there today and read and react and have preserved and protected the pile. One way to do that is to book gains, okay? And that's what I did. So we'll see if we get any follow through on a correction, and markets do correct for those of you that haven't been around for very long, obviously. What else in commodities? I find it interesting. We got corn right at trend this morning. That's new. So we're seeing, and we discussed this yesterday, follow through on food inflation reemerging. So corn would be the lead dog on this. Okay, this is one of the biggest ones. Of course, I'm measuring and mapping that daily. But even something like sunflower oil. Who uses sunflower oil? Lots of humans. Yeah, they do. Now, you'll never hear them talk about sunflower oil on CNBC. But the sunflower oil is up 3% today and is up 20% in the last month. And I can show you many things from milk to tea to sunflower oil that are up double digits in the last month. So the inflation in the real world is going up. Obviously, even if those prices were flat, the dollar's down 5%, so inflation's happening on a real basis. Dollar's going down and the prices are going up. So again, just wait until we get into post-election period. Inflation's going to start going up. The Fed's going to look dead wrong, and we're going to look back at all this as having risk managed it so far with fractal beauty. What else we got going on? Bond yields already hit on those. Bitcoin just failed a trend. So there's a lot of quad 4 going on in my notebook here this morning, Emma, and maybe a good spot to take some questions.
All right, great. So this first question here, is the dollar weakness, Keith highlighted, down 5% at the end of the macro show yesterday, mask the deceleration of inflation in the current quad 4? If so, does that potentially add fuel to the fire of inflation while heading into quad 3 later?
Yeah, what I just said is largely a good example of that, right? When you have the nominal prices of things starting to go up, in the case of food, everything I just rattled off, double digits, and the currency you're buying them in down 5. Yeah, the person who doesn't look at the world that way wouldn't see that. But yeah, I think that's probably going to be the case for a while, because we have inflation. If you go to our inflation nowcast, by the way, it's important to highlight again and to remind people we have the low on the street for September, but we have the high on the street for the fourth quarter and the first quarter. Okay. Because we're just using our models, and that's a critical thing. I don't know how many questions you've had on that, Emma, but we have, like, from institutional accounts, but this nowcast to start going up here, that's you're going to see. And by the way, if the dollar stopped going down but stopped going up from here, what you just said would impact these numbers higher on a real basis anyway, because the dollar is weak, whereas last year it was strong. So again, this number 260, the low monthly, we have at 2.38% for September. That's what I meant by, as soon as that's there, the Ed Hymans of the world, the consensus economists, Powell, who isn't an economist, doesn't have any models, he's just a lawyer parroting the political angle or whatever, they're all going to be hook, line, and sinker thinking that inflation, and think about the political message. This number is a September number that comes out in October, right before the election. This is why Elizabeth Warren's trying to get even more rate cuts, because they want to say, look, stock market's at the highs, employment is still relatively strong. They won't say relatively; they'll say strong, and they'll say, inflation. We won the war on inflation. Yeah, that's it's crazy, but predictable.
All right, so this next question relates to a tweet, so I think Eric's going to put that up for us. How do you decide which assets, factors, countries, et cetera, where you would double dip, buy more than one position, and which ones would you limit the position or avoid? I'm sure many ETFs in bullish assets have positive signals, so how do you choose which ones to do more of, such as you mentioned in this tweet?
Yeah, I'm showing see what I did there? It's like I snag a chart of my account at Fidelity there.
Okay, yeah.
Nothing pisses my trolls off.
Yeah.
Can you find the drawdowns? I mean, it's just, it's good, right? I mean, it's good. You work your whole life to perform, right? And for now, God willing, the process is working the way that we've iterated and evolved it. But if you take, so for example, today, actually, if you could take the early look today had my top 10 positions. Can you pull that up so that I can see all those positions one time here? You got to scroll through it. Thank you. Right. Okay. Stay there. Okay. So we got my number one position currently, and this is X my T-bill and bucks and FDRXX. Okay. High yielding cash. Yeah, we have that. We have 2. We have IVOL. We have 3. What do we got there? FXB. Yep. Okay. Now, I show the top 10 in the note. But anyway, the reason why these are moving up, Emma, is that on the question of signal strength, on the margin, are they building signal strength or losing signal strength? Positions get grossed up in the portfolio as they're building signal strength. So the reason why the pound is building signal strength is because the dollar is showing increasing signal strength on the short side. Weakening dollar, strengthening pound, okay? Yield curve, we just came off, yield curve got to +9 on 10s, 2s. You take the 10-year minus the 2-year, that got to +9. That's a new cycle high. That's why this thing is really strong. This one, shockingly, I got to buy ahead of the Fed event, which is anti-beta, which since July has been building signal strength. So again, when something is losing signal strength, like if you go all the way down at the bottom. XLV is near the bottom of my portfolio solutions. So you go all the way down to like the 30th position or whatever it is. XLV, it just did what I said on the macro show. It lost 1% yesterday alone. So that is losing signal strength. Now, a younger man or a former me running a portfolio would not do it that way. And by the way, that was a different game where the flows weren't nearly as where the flows weren't even there. Never mind as impactful short-term options, et cetera, et cetera. But I would be like, oh, that one's down. I'm going to buy more of it. Oh, it's down again. I'm going to go. I'm going to be captain valuation expert. It's really cheap now. I'm going to buy it again. And it could work because we were like value with a catalyst in some positions in some cases. But that's not the game that we play today, right? You don't just buy a bunch of cheap stocks. What you'd prefer to own is a bunch of expensive exposures that continue to get expensive for the right reason, i.e. the quad. Gold is as expensive as it's ever been. The premium on that is saying it's quad 4, right? These things all are building premiums for explicit reasons that make fundamental sense. So does that answer the question in terms of like how to?
Yes.
Was there another question inside there on like taking things off or?
Like how do you decide where you double dip?
Double dip,
yeah.
Right, the double dip. Now I've been double dipping I've been triple dipping. I mean, think about it. I've double dipped on India because I went INDA and SMIN. I've been double dipping on utilities 2 different ways there. I'm like epically dipping bonds. I got tons of bonds in terms of exposure. I do that just because I want to have more in the game. You know, like when utilities are signaling that strong, why would I max myself out at 6%? Guys, go to the position max sizing. Okay, so that's when I'll do my own little cheat move inside. You know how like the only good face-off people you ever played against are the ones that cheat?
Yeah.
I'm really good at face-offs. Yeah. So that equity position, like why would I just want to be, if I'm going to be that right on XLU, or if I'm going to be that right on GLD, why don't I get to double dip? So then I can own 12% if I add FUTY. I haven't got that big, but gold I could be at 24% because I double dipped there with AAA U. You notice the double dips are the ones that have been the best performers because they have the strongest signal strength. Okay, and at a point, that's exactly why I added XLV on top of pink because I was doing that. But now I'm like, oh, I double dipped there. Let's maybe take the XLV off. We'll have to see. There's no signal to do that today. So if you're going to do that today and healthcare goes back up, you didn't hear what I said. But people do have a central tendency to sometimes freak out if I say I'm going to sell something. You shouldn't. It's just incremental. This is very low stress actually executing on this process.
Question here on Germany. So you kind of mentioned it today along with China as it relates to oil and energy stocks. How do you risk manage a country set up like Germany where it is currently in recessionary quad 4, as you mentioned, but kind of heading into that quad 2 environment? Well,
the first thing you do is go to the signal. So when I go to the signal, EWG, it says bullish trend. When I go to the EWN, which is the Dutch, it says bearish trend. So I don't need to rationalize that intellectually and say, but it's got to be a short. No, I'll just go short this one, right? So if Germany's entering a recession, it's not like the Dutch are immune to that geographic impact or how the Chinese are slowing in particular. So I just really don't boil the ocean on this. If it goes from bearish to bullish trend, I stop myself out. That doesn't mean that I'm right on 100% of those. That just means that I made 100% consistent decisions. Try that, right? Just think about that. Somebody who's no good at this is not consistent and not disciplined. I can guarantee you that. And I mean across, not like did Keith get the last 1 to 3 days right in 4 RTA shorts in an up market. Don't be dumb. I mean people who are actually good at this for decades and decades. That's who Emma and David Salem are going to meet with today. And they flew in from Spain. When people make a lot of money and they know who can help them preserve and protect the pile, they fly from Spain to Stanford. Yeah. So we're not going to be dumb like some of the questions we get. We're not going to be dumb like our trolls are. We're going to understand that there's plenty of opportunity to wait and watch, pick our spots, add asset allocations and take them off. But we do not have to be short something that the market's saying don't be shorted. Why don't you just go short what's already working? And that's how I think about the difference between that and Germany. Germany's a big one. I mean, I get how people really want to get Germany right. Some of our clients, Germany is a big part of what they do. They run European money, so they want to know for those reasons. Yeah. But that doesn't make the answer as simple as the one that I'm allowed to make, or the decision that I'm allowed to make. If EWN's weaker, I'll short that. That's it.
All right. And we will wrap it up there. Thank you, Keith, and thank you, everyone, for joining us this morning. We'll see you back here tomorrow morning at 9 a.m. Have a great day.
I'll get things right one of these days. Sorry, folks. How we doing out there? I'm here to talk. Oh, everything crashed on me. Oh, my goodness. Okay. Well, let's go to hedgeye.com right now. We'll just bring you right through this here. So this week is Hedgeye All Access Week, if you didn't know already. Go to the homepage, click on that link right on the homepage there. You hear Keith talk about all our products. We had a lot of products to consider. You can check out every single one of them all this week. The macro show, you're already on the macro show, so you know about that one. The call, real-time alerts, the early look. Check them out, try them out. We have a whole bunch of new research packages as well. Those are brand new, lots of new offerings you can check out. So check out Free All Access Week. And then reminder, tomorrow we have a real conversation with the Tier 1 Alpha team. That'll be at 11 a.m. So check out Free All Access Week. Check out all those products. Find one that you like and check it out. Have a good week out there. Have a good day out there.